Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So the markets are all over the place, and so this edition of Next Level Charting is going to cover three very different areas. We're going to look at Treasury yields and Treasury bonds, because I think yields are headed higher. We're going to look at big breakouts in the Silver ETF and the Defense and Aerospace ETF, ITA. And then we're going to turn to clean energy, because clean energy ETFs are showing some short-term relative strength, and I want to show you a technique of playing or trading the pattern within the pattern, or the swing within the pattern. So bonds are typically a safe haven, Treasury bonds at least, and Treasury bonds are also a natural alternative to stocks. But if you look at TLT, it has not been an alternative to stocks in 2022, and it has not been much of a safe haven over the last 2 weeks, basically since the Russian invasion. And that's because bonds are spooked by something else. And I think we all know what that is. That's inflation. And that's why it's important to, keep that narrative on the back burner, because you might say, oh my God, we're going to war. Well, that means money's going to move into safe haven treasuries. Well, you got to see evidence on the price chart of A, an uptrend, or B, at least some sort of a breakout. Now, I've been watching treasuries quite closely, and I saw a short-term breakout. But if I look at the longer-term picture, you have this huge decline. And after this decline, you had a big bounce. And if we draw some lines on this bounce, we can see it took the shape of a rising wedge. And we don't have to put retracement indicators on here to say or to estimate that this decline here and this bounce retraced around half. Because come on, we're not looking for precise levels, but typically a counter trend move is going to retrace 1/3 to 2/3, with half being the median, if you will. And a typical pattern is a rising wedge. And so this is a bearish pattern, and we broke down there in early January in TLT, and we continued lower. So then we get a bounce and a lot of volatility. And the bounce is coming from the bid, which is coming from the movement into safe havens, Treasury bonds. But the selling pressure is coming from inflationary pressures. Inflation is running at really high levels, and that eats into the returns of bonds. That's the big enemy for bonds. So before I look at a shorter term chart, I want to show you the 10-year Treasury yield, because sometimes I think it's easier to analyze the 10-year Treasury yield and the chart and then apply the signals you see on that chart to say TLT or IEF, the two Treasury bond ETFs. Now, of course, the 10-year Treasury yield chart is going to be pretty much a mirror image of the 7 to 10-year Treasury bond ETF, because this is the 10-year yield. The chart I showed you, the TLT chart before, was a 20-plus Treasury bond ETF. So that's a longer duration there than the 10-year yield. But if we look at this 10-year yield chart, and the 10-year yield is the most important yield to watch. If you have to pick one yield to watch, the 10-year. It's the belly of the curve. It's used to set mortgage rates. It is the most watched. So the 10-year yield goes from like 0.5% to all the way up to 1.75% roughly. And it's 17 on the chart. But then we consolidated with the big triangle. So a triangle, after a big advance, is a continuation pattern. And because the prior move was up, it's a bullish continuation pattern. And you can see we had the breakout there. So that is bullish. We got a little bit extended and we came back. And now here's the important part. Look where we came back to. You have this breakout zone and you came back to the breakout zone. That's what's called a throwback. So you have this breakout move. You're overextended after this huge move. And you have a throwback to the breakout zone. The breakout zone turns first support. Also, if you can see this advance. Well, we've retraced, I would guess, a little less than half. So we're in that zone where you can look for a reversal, and you can see we're getting a reversal, and it looks like the 10-year yield is going to head higher, and that means Treasury bonds are headed lower if the 10-year yield is headed higher. So if we look at a shorter term chart of the 10-year Treasury yield, you can get a better idea of the details, the granularity. But basically, you have this resistance level that turns into support about 1.7%. So you have this big move, this hard throwback, but you're finding support, and we're getting a little bit of a breakout there. So that means yields are headed higher and bonds are headed lower, and they are not offering, they're not a safe haven right now. Look other places if you want safe havens, namely commodities. So now I want to shift gears and I want to go to two big upside breakouts. That would be in silver and the Defense ETF ITA. So here's the Silver Trust SLV, and this was my Chart Watchers article this past weekend. And I've got the trend composite down here in the indicator window, and you can see that it was positive there in May and stayed bullish up until a bearish signal there in July. So that was over a year that signal lasted. And this bearish signal has been for a while. It's been from July of 2021 up until late February, I believe. Let me put on the crosshairs so we can get that exact. And that would be late February when that turned bullish. So we have an uptrend signal in silver there based on the trend composite. And if you're interested in the trend composite, if you go over to the plugins icon there at the bottom right, there you can see all the plugins available for StockCharts ACP. And there's the Indicator Edge plugin. And the trend composite basically aggregates trend signals in 5 different indicators. So if I scroll down, well, actually, if I hit the settings at the top left, there are all the indicators. But you can read more about that if you go to the plugin link there. So we have a trend composite signal, and then we got a double bottom breakout. And so if I open up this chart a little bit, we can see that there are 2 lows in the 20 area. There's the intermittent high, and we broke above that level with a big move. Now, silver's going to be volatile. I mean, it went from basically 20.5 to almost 25. So that is a big move. It's going to be a volatile ETF. Now, if you remember the broken resistance turning support with the 10-year Treasury yield, well, if we get a throwback here, but it's maybe too early, maybe get to 26 and then get a throwback. But right now, this is a trend reversal. A double bottom is a bullish reversal pattern, and the breakout gives you a higher high, which means an uptrend. And so it looks like silver is going to move higher. And this is kind of the theme that's been going, lately with commodities moving higher. And silver's just dragging its feet a little bit because it's kind of late to the breakout party. Now, another one that I'm focused on is defense. This is ITA, the Defense ETF. Now, the thing about the trend composite, you're going to say, oh man, look at the whipsaws. What a bad indicator. Well, folks, all trend indicators are going to whipsaw when you have a trading range on the price chart, which is what we had basically in ITA. It was like a slightly down trading range until it started turning up in January. And so if we look at the structure of the price chart, this is a big advance, and this is just a long correction that kind of overstayed its welcome. But it is a big pull, big correction, because you can see it probably retraced a little less than half. And we're getting a breakout here, and we're getting a trend composite bullish signal. All 5 indicators are on bullish signals for the trend composite. And so if I clear the markings here and I open it up, you can see we're already getting a throwback here. So we have this kind of resistance zone, if you will, that we break out of. And we had a throwback, but it overshot when it got back down to 105. That's going to happen. But I think, this is a valid breakout. This is just a pullback after the breakout because you're overbought after this huge move. And I think that the long-term trend is up still for ITA. So at trendinvestorpro.com, I do written commentary, and I put out 2 written commentaries last week. I'm going to do 2 written commentaries this week. But I also follow the trend composite signals, and I update those on Tuesdays, Thursdays and Saturdays, there's silver playing catch up. And that's free if you go to trendinvestorpro.com and you click on the analysis link there at the top. And here's the ETF trend signal table. And if I scroll down, I've got 276 ETFs, and I'm I'm tracking the trend signals based on the trend composite. And subscribers get access to this. And it's sorted in a top-down format, so you can see the different groupings together. And if you want to see the recent signals, you click on the recent signal link, and there you can see the new uptrend signals. So we got a new uptrend signal in the inflation-protected bonds, 0 to 5 year. But we also got gold miners, IHF. There is defense as well. This is the Aerospace and Defense ETF XAR. It triggered a little bit later than ITA did. ITA triggered earlier. But that's available at trendinvestorpro.com. So this is an example of looking for the swing to reverse within a bigger corrective pattern. And so what we have here is we had just this massive market-leading advance here from the March 2020 low to the February 2021 high, an obscene advance. It was up like from 25 to 100. So you can that's just crazy. And then this huge correction, this deep pullback. But if you look at this, you say, well, let's put some trend lines here, some subjective trend lines. But it's kind of a channel type thing. And you say, well, it looks like it retraced around half. I mean, we don't need the Fibonacci's to figure that out. So we're in a potential reversal zone because we've retraced half. And then you can see here we have a higher low from January to February, whereas SPY, or the S&P 500 here, has a lower low. So that's showing relative strength here. And look at that. We've got a short-term breakout. So if you say, well, this big channel is a big correction after an obscene advance, so it's a bullish continuation pattern, but you're not going to get a bullish signal until a breakout here. And the trend composite is still bearish. But if you look at the swings within this bigger channel, you have a downswing, you have an upswing, you have a downswing, and now we've reversed that downswing and we've started an upswing. So this is the earliest signal you're going to get for clean energy, which is bullish. And then the next signal I would suspect will be when the trend composite turns bullish, and I'll be following that at trendinvestorpro.com. So here's another chart that's doing the same thing. This is PBW, and it's got this massive decline, which looks like a big correction. And then you can see a little relative strength, and you can see the short-term breakout there. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.